Anyway, let's jump right into it. Not the best day in the markets today. I'm going to start off
Yeah.
with the headline I'm reading here. Powell comments fuel 1,000 point market rout Friday. Stock slide a second week. Why don't you just jump right into that? Because I think you were going to lead with that anyway.
Yeah, for sure. You did say 2020, so just to be clear, it is 2022.
Did I say
Um,
2020?
yeah.
Well, I don't want it to be 2020 again. So, like, yeah,
Oh,
definitely 2022.
cool. Much to play back on it. Yes, Jay Powell today, all of his speeches over the last, many months or hours, and, he answer 100 questions. And this one was, I think, 8.5 minutes. It was a super short speech, but obviously the market took it at his point, which was ultimately there will be no pivot until inflation is tamed. And so the market said, okay, we see and hear you. So massive correction into what his comments were. I did watch it. I did kind of read through it. And Mac Ralph, that I follow there, did a great summary. Got a couple of charts to show you what's going on there. But essentially, he said that inflation is their number one mandate. He said, yes, there's going to be pain for asset owners. Yes, there's going to be pain for employees because there'll be job losses. But in order to bring inflation down, we will do whatever it takes essentially today. And the market reacted with that news.
Yep, big drop there. Okay, great. Well, not so great, but great. Um, all right. So what anything else that grabbed your attention this week?
So I'd say that was the big one to see what he was going to say. There was a few other Fed chairs that spoke throughout the week because they had Jackson Hole the last couple of days.
Right.
This was, I think, the big news announcement, I guess, of the week. If you look at the data continues to be the same, which is GDP slowing. July inflation print was slowing as well. And so for the people that I follow macro, they say, well, that's an initial start, but let's see what happens. Hedgeye continues to think that oil is trending down, so it's got a bearish trend in oil. So, if those continue and you get a continuation of those two things, then you probably get inflation slowing together as well. But you have GDP and inflation slowing right now. You have financial conditions tightening, and Powell told us today that he'll continue to tighten conditions. So, what does that mean? And where's that good news? I mean, the good news in that one is US dollar went up today and US long bonds went up today. And so that we have positions in both of those. So that's a positive from a positioning perspective. And overweight bonds, US dollars, I think continues to be a good place to be.
Gotcha. So based on that, did you get up to anything in the portfolios this week, or you're just holding tight?
Yeah, just holding tight. The one thing that I've looked at before is, remember, I trimmed the position on Coinbase, and so it has come back down, and so I sold it kind of in the mid 90s. I didn't add it back yet, but it's getting much closer to the buy point again in the mid 60s here, with 60 kind of being the bottom end of the range. So that's looking attractive again, but no action, sit tight. Let's see what happens. As we get into September now, everyone's coming back to markets, and so the volumes will come back. There'll be a lot more things to follow, and central banks are going to raise rates again in September. So sitting tight mostly, but some of the stocks that I like are coming back into their buy zone, and so I'd expect sometime in the next quarter that there'll be a lot of good opportunities to get a bit more aggressive. But right now, sitting tight.
Right. Okay. What do you got for us in the Ben's charts today?
Yes. So let's get it started here.
Bring those up.
Mm-hmm. Hopefully, it doesn't flash like it did when we were testing it before.
Yeah,
So just let me know if it's up there.
sure. Yeah, it's up. Just as we do that, we got a pretty good turnout today. So I'll just mention if anybody has any questions, or even if it's a topic you want Ben to cover and he hasn't covered it, maybe throw it in there in the Q&A button, which is located on the bottom, and he can touch base on any of that, or if you want to respond to anything we're talking about. All right, you're good to go. I can see the chart.
All right, perfect. Great. So this is a view on housing and jobs. And so, you know, every type of macro investor looks at things differently, have different signals, but I thought this was a kind of a great simple chart to think about, what are the leading indicators and lagging indicators? While housing tends to be a leading indicator to show us where the economy is going, or employment tends to lag a little bit. And so this is a great chart that Alf put out that, shows that, we're seeing a housing correction happening right now. And if you follow the dotted line on the screen there, looks like employment's going to go up. And if you look through the statistics, essentially, if you trust the backwards looking information, that means that the jobless numbers in the US sometime next year probably get somewhere in the mid sixes. So roughly doubling for where we are today. So, these are indicators to look at to say, are we through the worst of it, or is there still some things to happen? And right now it looks like, housing's correcting and employment probably follows that next.
Right. Great. Interesting.
Yeah. The next one. There we go. Sorry, this was another chart just around what's happening in the economy. And so the reason that I think this is interesting is it shows you kind of the last 5 major recessions as the US Conference Board. They take kind of the top 10 things to what are the signals. And so, we've been having this debate where, is it a technical recession? Is it this? Is it that? Ultimately, it doesn't really matter. But what it's pointing at here is that every time we dip below this line for a period of time, and we're at 0 right now, every time historically over the last 5 major recessions, we dip below this line, we've tipped into a recession. And as you know how most things go, is you get overexpansion, you go overextension to the downside. The data continues to point to the fact that you want to have cash, US dollars, and bonds, be defensive, and be ready for some opportunities as they present themselves.
Gotcha. That's good. Interesting.
All right. So just one more kind of technical chart, and then something that we've been covering with quite a few people lately. So, continue to follow the evolution of crypto. And I was in Montreal this week, had a number of conversations with research individuals and things. And, there's still, I think, tons of opportunities around trying to understand where all of the moving parts fit into kind of the future of the Web3 movement that we're seeing. And, we've talked at length about Bitcoin and Ethereum, but what's getting a lot more attention to behind the scenes is Solana. And so right now we've had Bitcoin, and that's getting introduced institutionally. I mean, BlackRock and Coinbase put together a institutional partnership to allow all these institutions to trade Bitcoin. And Ethereum right now is moving from their kind of proof of work to proof of stake. And really what that does, cuts down on a lot of costs, and it also cuts down on the efficiency. So the proof of work is every time a transaction happens, there's an algorithm that needs to run, sucks out a lot of energy. It adds to the amount of Ethereum out there, so it's inflationary. So we're moving from that one to the proof of work, which is 99% more efficient, and it burns Ethereum at the same time. So that actually reduces the amount of Ethereum out there. So that's going through the shift right now. That's going to happen sometime in September. But when we look at what Solana has been doing, is they've really been focused on the speed and the transaction. And I thought this was an interesting chart to take a look at kind of how these things happen and how fast and how we're moving from what we have today, where there's a lot of layers and it's slow for transactions. Solana has the ability anyways to process 65,000 transactions per second. And just to give you a scale of what that means, obviously you can see Visa, which is the fastest in the world, at 24,000. They kind of they 3x that right now. And so it's interesting. It's really moving along quickly, and something that I think will gather more attention, particularly with the finance companies and the payment systems of the world.
Right. Why is it so much faster? Is it just the blockchain technology? Is that what they're saying? Yeah.
Yes. Yeah.
That just makes so much sense to me. It does.
Okay.
Makes a lot of sense. All right.
Okay.
We got two more?
Yeah, two more quick ones. Just we've been doing a lot of estate planning with people this probably the last 3 or 4 months, where been going through financial plans, estate plans, and just kind of thinking about planning in the future and things like that. So I wanted to just touch on 2 points. One of them is the if you are thinking about doing this, one of the best ways, and a lot of clients know this, but for those that don't, one of the best ways to provide a charitable contribution is to donate stocks, bonds, mutual funds, anything that you have a big capital gain on. So, this is a pretty good example just to take a look at. If you have, a big capital gain in your investments, and you contribute those shares to a charity, you'll get the full tax deduction for the amount that you contributed and no capital gains. So if you put in $2,000 investment, which grew to 10, you contribute that 10,000. There's no $8,000 capital gain, and you get credit for that $10,000 contribution. So it's a good way to do it. We do have clients that do this. We actually do have some charities that actually trade through us as well. So it's a good way to think about doing your charitable contribution if you go that route.
Yeah, that's a good one. Yeah.
So last one, just before we go on this is, there are some people that want to have kind of the legacy contributing, and they want to set up their own foundation where, say they want to contribute 100, 150 grand that will last for 10, 15, 20 years. We have access within National Bank to what's called Philantra Foundation, where it's a minimum $25,000, and we manage the investment. So you contribute the 25,000. If you want to have kind of a perpetual payment out to, charity of your choice, hospital, cancer foundation, something like that, we have the ability to do that for you and manage it on an ongoing basis if that's something you want. Instead of setting one up yourself, obviously setting one up yourself is $10,000 to $15,000, where we handle all the legal on this side, and there's no cost to set them up for us.
Wow. Well, that's great. That's a great option. I don't think a lot of people know about that. So definitely a good option. So if they want to do that, they should just reach out to us. We'll set that up for them.
Absolutely. Yeah.
Okay.
Yep.
Perfect.
Yep.
Okay. Good stuff.
I think we got one question in there.
Oh, we do have one question. Okay.
Yeah.
Okay. All right, from Eric. Why would oil and gas go down given tight supply, limited capex, and Russian-Ukraine war very likely to go on for a good while, more than offsetting possible recession? Question mark, sorry. Was a question in the last part.
Yeah, so it continues to be a great question, something to think about. As I dig in with some of the oil and gas experts to try to understand, like, what's the premium right now baked into the price of oil, and to your point, recession versus supply. And from the experts that I've talked to, their view anyways is that there's somewhere between a $60 and $80 premium per barrel because of the war that's happening today. And so with the view that the economy is slowing and markets tend to price in what's happening in front, with oil and gas being one of the most volatile asset classes that's pricing ahead. So with oil coming down to where it is right now, I think there'll be a much higher kind of floor on it. If the war wasn't happening, oil comes down to $40, $50 a barrel. But because of the war, that premium continues to stay in there and probably puts a higher floor than would be with the recession coming. But the pressure's coming down because the economy is slowing globally, and with the amount of inflation and pressure that's happening, particularly in Europe, that's going to slow things dramatically faster. And obviously consumption slows quickly, and so oil and gas is pricing that future, more oil than gas, but pricing in kind of that future expectation.
Got it. Okay, if anybody else has any questions, now would be a good time to ask them here as we're starting to get to wrap up. So okay, that's great. What are we looking ahead to for next week? I guess it's the end of the month next week.
Yep. So end of August will probably be the last kind of quietish market activity next week. So we'll see if this follows through this correction that we had today, or if it was just repositioning. Bonds rallied in both Canada and the U.S. on the longer end. U.S. dollar went up, so I'd continue to watch that and see where we go from here. But last week of the month, as we head into September, there'll be lots to pay attention to. I think it'd be a relatively quiet week from a market perspective, but we continue to say what's happening over the next couple of quarters. And as I've commented on week over week, the next 2, 3, 4 quarters in North America look like they're slowing, where some of the other parts of the world, like China, look like they're going to accelerate. And so we continue to look at, do these macro points continue to line up, and see what happens and adjust if need be.
New Asian market seems to be improving. Is that a sign of anything?
Yeah, I mean, I think the areas that some capital got raised, somebody asked that recently as well. We had a little bit of REIT action, or a couple of debentures come to market in the REIT space. TransCanada did a big issuance a couple of weeks ago. And so I think that was, the market thawed a bit, but, in a really hot market, if TransCanada raises close to $2 billion, that deal sells out really quickly. This one probably took a day and a half or so. So it's a little better, but not totally easy kind of market that we're used to. Bond issuance continue to come, with Quebec issuing more debt again this week. But so it's better, but I don't think we're right into that easy conditions where it's easy to raise a lot of capital just yet.
Gotcha. Okay. Anything else you want to end off with?
No, that's it. As we get into September and you're back, if you have any meeting, if you want to book a meeting with us again, please reach out to either of us or go into our calendar. And both of our email signatures, we have access to our calendars. You can book something directly in there. But look forward to talking with you when you have a chance. And have a good last week of summer, and we'll catch up again next week.
Good stuff. All right, everybody. Thanks for joining. We'll see you next week.
Sounds good. Thanks. Take care.